Hi everyone, it's Jack back in the video. Today I'm going to be talking about SoFI, which really the stock at the moment at the minute, in the last 30 days or so, or since the 12th of May at the time I'm making this video, it's up 83%, which is absolutely staggering. Very close to its 52-week highs, which is setting by the day now, up 104% since the start of the year. Absolutely fantastic, now up to a nearly $9 billion market cap. Still seen bigger highs in the last few years. Valuation is tough here, trading around 1.5 times book value, which is a metric often used for banks. Very few of these banks grow 30% a year, and 1.5 times book is actually not an unreasonable place to pay for a high quality bank in my opinion. Currently around 4 times sales, which is a metric that's often used for it, but not really something that I like to use. We're projecting earnings heavily into the future really. The business is starting to produce significant adjusted EBITDA, but until its gap, it's hard to quantify. I want to talk about the positives and the tailwinds behind this business and why it's gone up 83% and how much more it's got left in it in the near future. And then talk about the most recent quarterly performance for this business, how the business is performing and its guidance. A key headwind for this business, and really the largest headwind for this business aside from higher interest rates which has affected everyone, has been the student loan payment pause. Now this has been an absolute killer for this business. SoFi's bread and butter early on was student loan refinancing and financing, and the payment pause for the last 2 years or so has really put a dampener on the largest part of this business, or at one time the largest part of this business, and the debt ceiling deal has meant that the student loan payment pause will cease to be effective 60 days after June 30th, so August 30th or so, give or take a few days. That is going to be the end to the student loan payment pause, and SoFi's student loan refinancing business can really start to kick on again. Now this is a huge tailwind for this business. Effectively a dormant business unit is going to come back to life, and this business has already been putting up excellent revenue numbers while this business has been dormant. Really big tailwind for this business. One thing I noted with this business recently, which is something you always like to see, is when executive officers, particularly CEOs, which Untitled is, are buying significant amounts of the stock, because we want them along for the ride with us. We want them to be accountable with their pockets, and that's exactly what they're doing. Untitled has bought significant amounts of stock in around the $5 range, so I had spectacular buys up around 80%. If not higher on some of those where he's buying at $4 or so. So absolutely spectacular returns in less than a month in some cases. You can see bought for $4.67 in May. Absolutely fantastic buy there. Of course, he's probably about neutral because a lot of his shares he'll have bought above that. But even still, absolutely fantastic buy, and it's nice to see that the executive officers are on the ride with us. Looking at this business's most recent numbers, and they were really excellent for a business that's trading at the time that was trading for less than book value. 43% year-over-year growth for adjusted net revenue of $460 million. That's just continued quarter-over-quarter growth. Quarter-over-quarter numbers are slowing down. That is to be expected. There is a law of large numbers at play here. As it gets bigger and bigger, it gets harder and harder to grow the revenue. There is a notable deceleration risk here if the revenue continues to decelerate, or the revenue growth. Can we justify its valuation? At the minute, yes, I believe we probably can. If it continues to blow up, because clearly, while SoFi stock is undervalued to some extent, it is definitely detached from valuation. It has not suddenly got 80% better in the last month. It has definitely got better, but it's not got 80% better. I believe there is definitely a degree of undervaluation, however, it's definitely not got 80% better. Adjusted EBITDA grew 8.4 times year over year. Again, this is a company that's in relatively early stages of profitability, so growing 800% is not going to happen every quarter by any means, but 800% year-over-year growth is definitely nothing to be sniffed at. This business, like many businesses, they've decided all of a sudden profitability matters, valuation matters, and your stock is going to get battered if you're not willing to have a plan to profitability in the next few years or so, and SoFi is really executing on this. New members up 46% year-over-year, 433,000 new ads on an absolute basis to now 5.6 million members. This is really impressive growth in my opinion. In the last 3 years, they've 5.5 times the number of members, which is absolutely spectacular. However, in absolute terms, the membership numbers are fluctuating, typically around 400,000 mark, if not a bit higher. Year-over-year growth, however, is clearly decelerating. To some extent, there's a law of large numbers here, and you obviously cannot grow at Q1 2021 110, 113% rates forever. There's obviously going to be some deceleration as you capture your market, but I'd like to think there is more market to be had for SoFi, and they can continue growing in the greater than 40% range for some time. The business also recorded 46% year-over-year growth for new product with 660,000 new ads. Again, absolute terms kind of fluctuating about where it normally is, year-over-year growth decelerating. But again, this normally tracks roughly in line with members, if not a bit higher. This is to be expected if member growth rate in percentage terms is declining, then this is going to decline, but not something I'm overly concerned about right now. A more consistent area of the business revenue growth-wise, albeit lower, is in the lending product segment, where they're now at 1.4 million lending products as of Q1 2023. That's 24% year-over-year growth, and it has been 24% for the last 3 quarters, before that 23%. So they saw decent re-acceleration from 12% in Q1 2021, when they were kind of at the zenith in terms of adding everywhere else, because this is a relatively young business segment. And they've re-accelerated from around 12% in Q1 2021 to 2 years later 24%, which to me is relatively impressive. General financial services products up 51% year over year to 7.1 million. Again, same trend really. In Q4 2020 we saw 315% year over year growth. That was obviously going to decelerate. As long as they can keep this deceleration in check and maintain above 30% growth, I'd like to see this sort of valuations. If the stock continues to balloon, I think the valuation may get out of hand, but right now I'm quite happy paying this sort of valuation for SoFi. Guidance at the time worried analysts a little bit. For the next quarter they're expecting on the low side 32% year over year adjusted revenue growth, and the high side 35%. This is again a deceleration from the previous quarter, which is 46%. If this continues to decelerate, it will definitely be something to be concerned about. However, when this stock was trading at $5, it just was obviously undervalued for my money based off its year-over-year revenue growth and its potential. Right now, I believe it's getting towards fairly valued, if not fairly valued. They're expecting off this an adjusted EBITDA margin of around 11 to 13%, which is roughly in line with where it's been. Again, this profitability needs to change soon, in my opinion, but adjusted margin is better, or adjusted positivity is better than no positivity at all. But we really need to be able to value this company effectively, need to be seeing actual GAAP EBITDA margin and free cash flow. Financially, this business is in a reasonably good position as far as I'm concerned, has around $3 billion in cash on the balance sheet, around $6.25 billion of total debt, giving it a net cash of minus $3.25 billion. However, for larger banks, you should see the debt numbers for them. They're absolutely crazy, because debt is kind of inventory for these businesses. Now, SoFi is a bit different because it offers all sorts of financial products. It offers, crypto trading, actual trading, all sorts of financial products. But debt is kind of inventory for this business. Absolutely nothing I'm going to be concerned about. Assets are growing at a rapid rate compared to debt. Total assets is over 20 billion now. Comparing that to debt, I'm very happy with that debt, or that asset to debt position, or asset to liability. Very happy with that position. Cash is growing at a decent rate. I'm very happy this business will be able to pay up its current obligations, no problem, and have sufficient cash on the balance sheet. For me, SoFi is trading at a valuation that I'd be quite happy to pay right now, but not an overly big bargain. Valuation, of course, is tough. Trades at around 1.5 times book, which is a metric often used for banks, and for most current banks, legacy banks I would call them, is quite expensive. Of course, those banks are not growing 30 to 50% a year. Currently 4.5 times sales. I don't like using price of sales. It doesn't really mean anything when you compare this business to what it's traded at in the past, because 2021 price of sales numbers, you could be looking at 15, 20, 30 times sales. Other than that, when we're looking at earnings, we're projecting into the future. Of course, we can do DCFs on SoFi, but I think it requires such heavy projections. For me, this occupies a position in my portfolio because I am a SoFi shareholder, where I'm willing to have a relatively speculative bet on a business that I think is growing excellently, occupies a good niche in the market, and has a lot of tailwinds behind it with the restarting of this business segment in student loans. However, of course, revenue deceleration is certainly a problem. It has many tailwinds behind it, but if revenue continues to decelerate, I don't think it can justify its current valuation if it doesn't start producing significant profitability on a not adjusted basis. Of course, it's spending a lot of money right now to acquire new customers, and that's absolutely what it should be doing. But how much leash is the market going to give this when it's nearly doubled in less than a month? How much leash is the market going to give a business like this if its next earnings it's not done something significant? That for me is tough. However, I'm a long-term investor. I was buying this business at $4. I was buying it at $10. I'm probably going to be buying it now. What sort of allocation would I like? Not too much. Where it is right now, it's around 6% of my portfolio. I'm happy with that. If it goes down a bit, I'll probably buy more. I might buy now. It's probably one of my best ideas. But for me, it's about fair valuation, not a bargain by any means, not overly valued. Just right about right. I think it was an absolute steal at $4 and I invested quite heavily there. Of course, this is just my opinion. You should let me know what you think in the comments down below. Let me know what you think of SoFi. Let me know if you think it's a bargain at $9, if you think it's a bargain at $15, whatever you think, let me know in the comments down below. Let me know where you think it's going to be at the year end. I wouldn't even like to call it. I did not predict near 100% rise in less than a month. It's clearly detached from its valuation. So let's see what happens. Let me know what you think in the comments down below. Like and subscribe and enjoy the video. I'll see you again next time.